Welcome back again to our deep dive. Today we are going to discuss if SMCI is worth the risk.
Oh, yeah. That's an interesting one for sure. You've given me a lot to look at here. I mean, company profiles, financial reports, even some investigative journalism. It seems like SMCI's got a lot going on under the hood.
So let's start with the basics then. What exactly is SMCI, and why are they making headlines these days?
Well, SMCI stands for Supermicrocomputer Inc., and they're based out in Silicon Valley. They develop and manufacture these high-performance server and storage solutions. So basically think of them as like the backbone of data centers and cloud computing. And they're publicly traded on the NASDAQ.
Okay, so they're in a good spot then.
Right.
Everyone needs servers. What makes them so special?
Well, their growth has been really something else. I mean, their market cap has surged 16 times in just 3 years. 16 times. They even got added to the S&P 500 and the NASDAQ 100, which are some pretty big deals. And they're also pretty tight with NVIDIA, the big name when it comes to AI chips. So they're in a good position strategically.
That's pretty impressive. So they're riding the wave of AI, seeing massive growth, and they're rubbing shoulders with the major players. Sounds like a recipe for success. Where's the risk in all this?
Well, that's where things get interesting. You see, while SMCI is definitely benefiting from the AI boom, there are some pretty big challenges and concerns that investors need to keep in mind. Like, the competition in this space is absolutely cutthroat. They're up against giants like Dell and HP who have a lot more money and long-standing relationships.
So it's not just about riding the AI wave, it's about staying ahead of the competition. What does that mean for their financials then? Are they actually making money?
Yeah, they are profitable. But their financial picture is kind of a mixed bag. Their revenue growth is impressive, no doubt about it, but their gross margins have actually been shrinking lately, which suggests that they're having to lower prices just to keep up.
Hmm, that's not a good sign. Shrinking margins can be a slippery slope. What else should we be looking at when it comes to their finances?
Well, two key metrics that investors usually focus on are the price to earnings ratio, or PE ratio, and then the debt to equity ratio. The PE ratio basically tells you how much investors are willing to pay for each dollar of earnings. SMCI's PE ratio is pretty high right now, which could mean investors are super optimistic about their future earnings, or it could mean the stock is overvalued.
Okay, so we have a high PE ratio, shrinking margins, and intense competition. That's starting to sound risky. What about their debt? Are they in a lot of debt?
Their debt to equity ratio is actually pretty moderate, which means they're not overly leveraged. This is good because it gives them more room to invest in growth and handle any potential rough patches. But it's important to remember that even with a moderate amount of debt, if their earnings take a big hit, they might struggle to meet their debt obligations.
Right, so we have a company with a high PE ratio, shrinking margins, moderate debt, and they're facing some serious competition in a market that's changing all the time. It's complicated. What's the outlook? Where do the analysts see SMCI going from here?
Well, the forecasts for SMCI are kind of all over the place. Some analysts are super bullish, predicting the stock could double or even triple in the next few years. They point to the company's good position in the AI market, their relationship with NVIDIA, and their track record of coming up with new stuff.
So some people think SMCI is going to the moon. What about the people who are a little more cautious? What are their concerns?
The more cautious analysts are worried about those red flags we talked about, shrinking margins, fierce competition, and the possibility that the AI market could cool down. They also point to some other things that have come up in the research we've done.
Like what? What else is raising red flags when it comes to SMCI?
Well, one concern is their history with accounting irregularities. Back in 2020, they settled charges with the SEC for improper revenue recognition. We're talking over $200 million worth. And what's even more concerning is that after the settlement, they rehired some of the same executives who were directly involved in that whole accounting mess.
Wow, that's a bold move. Makes you wonder about their commitment to transparency and ethical behavior, doesn't it?
Exactly, and it's not just about things that happened in the past. There are some new accusations in a lawsuit saying that they went back to those same shady accounting practices just 3 months after settling with the SEC.
So we have potential accounting issues, shrinking margins, and intense competition. Anything else?
Oh, yeah. There's also this whole issue of related party transactions. Nearly $1 billion over the past 3 years has gone to companies controlled by the CEO's brothers. It's kind of a tangled web, and while there's nothing inherently wrong with related party transactions, the sheer volume of it and the lack of transparency, it raises some serious questions about, potential conflicts of interest and whether these deals are really above board.
Okay, so we have concerns about their accounting practices, tough competition, and these related party transactions. This is starting to look like a pretty risky investment.
And there's one more thing that's making some analysts really nervous. It seems like SMCI might be having trouble holding on to their biggest customers.
Customer exodus. What's happening there? I thought they were riding high on this whole AI wave.
They are, but it's a tricky landscape. SMCI has admitted they're under-indexed with hyperscalers. Those are the massive tech companies like Amazon, Google, and Microsoft. They're the ones who really drive demand in the server market.
Ah, so they're missing out on the biggest piece of the pie. That's a problem if you're trying to be a top player in the game.
You got it. And it's not just that they're missing out on new business from these hyperscalers. There are reports that they've actually lost existing clients. One former sales director claimed that SMCI lost Amazon Web Services as a client because their CEO, Charles Liang, pissed off Jeff Bezos. Now, I can't confirm if that story's true, but it does highlight a potential weakness in how they manage their relationships with clients.
Ouch. Losing a client like Amazon is a huge blow. Are there any other examples of this customer churn?
Actually, there are several. We came across case studies of companies like DigitalOcean Genesis Cloud, GMI Cloud, and NextGen Cloud. They've all reportedly moved away from SMCI because of problems with quality and service.
So it's not just about getting new business, it's about keeping the clients they already have. What kind of quality and service issues are we talking about?
Well, according to some of our sources, there have been problems with faulty products, issues with firmware, and really slow support response times. For example, Genesis Cloud, which SMCI brags about as a success story on their website, they reported a 10% failure rate on their Supermicro servers. Another company, GMI Cloud, said they had a problem rate of 17.5% on their order of 256 servers. And these aren't isolated incidents. Multiple former employees and channel partners have said that after-sales service is a major weak spot for SMCI.
If you can't deliver reliable products and good support, you're going to lose clients. It's that simple.
Yeah.
Especially in a demanding and fast-moving market like AI.
Absolutely. And to make things worse, Dell seems to be taking advantage of SMCI's struggles. Two of SMCI's biggest clients, CoreWeave and Tesla, they recently signed some big deals with Dell. It's a sign that things are shifting in the industry.
So they're not only facing pressure from these established competitors, but they're also dealing with internal issues that are pushing customers away.
And there's another layer to this whole thing. Remember how we mentioned SMCI's history with those accounting violations? Well, it looks like they might have a habit of bending the rules.
Uh-oh. This doesn't sound good.
It's not. Back in 2006, even before they went public, SMCI pleaded guilty to illegally exporting components to Iran. They got fined and said it was a mistake they learned from.
Okay, so a past violation of export controls. Is there any evidence that this kind of behavior has continued?
Unfortunately, there is. During the Russia-Ukraine war, the U.S. government imposed these strict sanctions and export bans to Russia, targeting things like high-performance computers and components. SMCI publicly said that they had stopped all sales to Russia. But what we found out is that exports of SMCI products to Russia have actually tripled since the invasion started.
Wait a minute. So they said one thing publicly but did something completely different. How is that even possible?
It looks like they've been routing products through these brand new shell companies in Turkey. These companies act as middlemen, basically hiding where the goods are really going.
So they're potentially breaking sanctions. What kind of products are we talking about here?
Oh, a lot of the exports match up with what the U.S. government calls high-priority components, the kind of stuff that could be used by Russia for military purposes. Things like processing units and other essential parts for advanced computing.
This is a serious red flag.
Yeah.
They're not only putting their reputation at risk, but they could also face some serious legal consequences.
Exactly. And it really makes you question their decision-making. I mean, their actions totally contradict what they're saying publicly, and it could have huge implications for their future.
Wow. So we have accounting irregularities, customers leaving, and potentially even sanctions evasion. Anything else?
Oh, there's one more piece of this puzzle that's particularly troubling. SMCI has this joint venture with a Chinese state-run company called FiberHome.
Okay, a Chinese joint venture. What's the problem with that?
Well, FiberHome has been accused of being involved in some pretty bad human rights abuses in Xinjiang. They've been put on a U.S. government watch list because of their role in the oppression of ethnic minorities in the region.
So they're doing business with a company that's accused of human rights violations. How does SMCI justify that?
Their argument is that the joint venture itself isn't on the watch list, even though their partner is, but it's kind of a weak argument. They're still doing business with a company that's complicit in some really serious human rights abuses.
So after this deep dive, what do you think? Is SMCI worth the risk?
That's the big question, isn't it? We've seen both sides of the coin. The potential is definitely there. They're in a great position to take advantage of the massive growth in AI and high-performance computing. But those red flags we talked about are serious.
Hmm.
The accounting issues, the customers leaving those deals with related parties, and the whole sanctions evasion thing. It all suggests that this company might be willing to cut corners.
You've given me a lot to think about. It's almost like they're playing a dangerous game, trying to ride this wave of AI hype while pushing the limits of what's acceptable.
Yeah, that's a good way to put it. And in the end, it comes down to each individual investor to decide if they're comfortable with that level of risk. If you're someone who doesn't like taking risks, then SMCI is probably not for you. There are other companies in the AI space with a lot less baggage.
But for those who are willing to take on more risk, there's a chance for big rewards if SMCI can pull off their strategy and overcome these challenges. It's a high-stakes gamble for sure.
Absolutely. And that's what makes this so fascinating. We've given you the information, the insights, and different points of view to make a smart decision. Now it's up to you to weigh the pros and cons and see if SMCI fits with your investment style and how much risk you're willing to take.
This has been a really interesting deep dive. Thanks for walking me through this complicated landscape.
It's been my pleasure. Always happy to shed some light on these companies and help investors make better decisions.
It definitely adds another layer of complexity to the SMCI story. We've covered a lot of ground here, from their impressive growth in the AI market to their questionable dealings and potential legal risks. It's a lot to digest. What's your overall assessment? Is SMCI worth the risk?
Well, that's the million-dollar question, isn't it? And to be honest, there's no easy answer. It really depends on your own investment philosophy and how much risk you're comfortable with.
Okay, let's break it down. What are the potential rewards for investors who are thinking about SMCI?
The potential upside is big. I mean, they're in a market that's projected to just explode in the next few years.
Yeah.
The demand for AI servers is only going to go up, and SMCI is in a good spot to take advantage of that growth. They've got a solid history of innovation, and their partnership with NVIDIA gives them an edge over the competition.
But we can't ignore those red flags. How do we weigh those against the potential rewards?
That's the tricky part. You have to think about how likely those risks are to actually happen and what kind of impact they could have on the company's future. The accounting irregularities are definitely a concern, especially considering what happened in the past. The customer exodus is also worrisome because it suggests they might be losing ground to their competitors. And then you add the sanctions evasion and the ethical questions about their joint venture. It just adds another layer of complexity.
So it's a balancing act, weighing the potential for growth against these pretty significant risks.
Exactly. There's no right or wrong answer here. It's a judgment call that each investor has to make on their own.
This deep dive has definitely given me a lot to think about. What would you say is the most important takeaway for someone who's considering investing in SMCI?
I think the most important thing is to do your own homework. Don't just go by what you see in the headlines or get caught up in the hype. Dig into the details, understand the risks, and then make a decision that's right for you. Investing is about more than just numbers. It's also about making sure your money aligns with your values.
Well said. Thanks for taking us through this complex and interesting deep dive.
My pleasure. Always happy to shed some light on these companies and help investors make smarter decisions.
Thanks for tuning in, guys, and I hope you really like our content. Please help to like and subscribe as always.